Traders, welcome back to our price action trading lesson. We're looking at S&P 500 and mini futures. We're going to use price action rules to help us identify where the market is going to go and how we're going to find high probability setups. The structure of the market right now is indicating, for the most part, a trading range, flat EMA, consistent price swings up and down, but at the same time, this is not healthy confirmed trading range. Why? Well, because there is slight bearish bias present in this market. So much empty at the top, only 1 bounce here, and the keel at the bottom is not really holding as well. So I have to remain objective and honest with myself that I have conflicting variables. And when I have conflicting variables like this about what is the pattern and the structure, I have to remain patient and I have to give price action more room to develop so I get better picture to work with. Okay, some traders that are looking for setups on every single candle, and you have to understand that there are areas on the chart where prices need to develop more so you have the structure that is easier for you to trade. If you're not sure what is the pattern, you cannot trade. So right now, there's a way for me to draw a wider downtrend, but I don't want to get trapped selling. I don't want to go long at the same time, so I'm just going to be patiently waiting. Can't take anything, break a new high. I'm going to be following short-term channels. Okay, prices keep working lower, so now it gets really confusing. Another sign of bearish bias, but at the same time, it is too sideways for me to be looking for any broader channel. And prices finally are breaking to the upside. So now it is starting to be easier for me to navigate. I'm going to widen the trend range, but more importantly, I'm going to connect these swings at the bottom and I'm going to identify an uptrend, because you always want to make sure you're going to take a look at the beginning of the move, connect the very first swings. We have potential overshoot. We can have stronger pullback in the opposite direction, but prices are continuing to go higher. It's not behaving as overshoot. Okay, we broke this latest highest high. So since this is not acting as overshoot and prices keep working higher, this means there is no overshoot, and I'm going to make the channel a little bit steeper. I'm going to start from the second swing. You know, it doesn't really make a difference because we have matching lows. Copy it, but at the top, the uptrend still fits well. You're always looking for candles to fit neatly inside of this channel. Prices are correcting. I'm going to draw a shortened downtrend working lower. Can you take second entry long? You cannot. Why? Number one, signal bar is really not that great. And number two, more importantly, you have to follow the short-term channels, because even when the big pattern is in play, you have to respect the short-term trend line. And this downtrend is in play, and as long as this downtrend is in play, I cannot go long just yet. Okay, at the same time, I cannot sell. Why? Well, because we expect new high. This was the bigger trend. Okay, this one takes precedence. So let's see what's going to happen. Okay, we're breaking above EMA, and now it's starting to be a little bit easier for me to understand that we're going to get the new high. Okay, this downtrend is retraced. Sellers will not get new extreme. This spike up needs to get new high following the trend line rule, and now we have lower high, high low confirmation setup. This is a new low, no break below, no break below, no break below. First entry short that failed, and it is confirming the fact that we need to get a new high tested for this uptrend. First decent high probability setup, because you can imagine how many sellers must have sold below this very strong bearish bar. But this uptrend is the bigger pattern. It resembles a trading range, so we're heading from the bottom most likely all the way to the top. We have a failed second entry short, but I cannot go long now because the signal bar is terrible. It is a little bit congested, quite close to these highs. It worked anyway, but the signal bar is just a bad. And now that I see prices working higher, I'm going to measure the first leg and project possible target where the buyers may take this market. I'm also going to mark my new high. Okay, prices keep working higher. So right now I can see we exceeded the measured move. And this is a little bit too bullish, so I'm not going to be fading just yet. There is no break below this bar anyway, but I'm not going to be fading because this is a little bit significant uptrend working higher. And also there's so much empty room. The key level at the top is not really getting confirmations. So I'm going to be patiently waiting. If I'm thinking about selling, I need to see push below EMA and reverse a pattern. But prices keep working higher. So at this point, I have to ask myself, hold on. Why after breaking new high, we keep working higher so much? Okay, you can see this uptrend has a break a new high here around this price level. Why do we continue to go higher like this? Why did we exceed the measured move? This means, and once again, this means there is probably right now stronger bullish momentum being developed. Okay, so when I'm watching this, I have to admit, okay, prices are a little bit too bullish. I'm still going to respect the short-term downtrend though. As you can see, I'm going to connect the swings at the top because we may go back into trading range, although now it is starting to look way more bullish. And because we had massive rejection of the EMA, now I have to adapt. Okay, we're probably going to go higher, so I'm going to redraw wider uptrend, something like this, because it looks like prices are establishing a brand new uptrend given the fact that after new high we keep working higher. Measured move was exceeded, so I'm forced to be right now thinking bullish. This downtrend is in play and I would like to see new low or new low attempt. And now we have break attempt to test the new extreme and it failed, and we have massive bullish bar. This is a new high. I believe this is the first entry low, pullback, second entry low, so I'm gonna mark this as a high low. This is high low, strong bullish bar off the EMA. This is a great setup because at this point EMA keeps holding twice. The bullish trend is probably the pattern, and downtrend had the attempt to test the new low and it failed. You got stopped out by a few ticks, and now you have even stronger pattern. New low, first entry short, second entry short, failure. You can also see you have small variation over double bottom, so you can re-enter because your analysis didn't change. Basically your analysis remains the same, and now you even have stronger pattern because this is failed second entry short. Downtrend now created stronger push, almost extreme tested. T1 signal bar back above EMA, you can re-enter. So this ended up being just unfortunately tiny little fake out before the buyers took it higher as you expected. So nothing you can do. You cannot predict these fake outs. They're part of trading. You simply need to accept them, remain objective, so you can re-enter on the next one. Failed second entry short, and market keeps working here. Now, as you can see, this is extremely steep and not acting as overshoot. So what I'm gonna do, I'm gonna delete this and I'm gonna look for some steeper alternative that would explain this price action better. So I selected a channel, something like this: one swing, second swing, third swing confirmation. This is what I like to see. I'm gonna copy it. We still have overshoot. Okay, so I can expect stronger pullback. Let's see what's gonna happen. Prices are definitely consolidating, but the highs were broken again and we keep working higher. So I have to widen now. Once again, good lesson how to widen. Overshoot is not acting that way, okay, because we continue to go higher. We didn't even touch the EMA, so I can right now widen the channel because structure is not acting as overshoot. And you can see if you enter here, you can still be holding the runner and you can trail the stop loss. You're gonna take the significant swing, and let's say you're gonna place it one tick below these lows. This is the significant swing. You don't want to tie it super tight because there are going to be pullbacks and you don't want to choke your runner. You still want to make sure you're going to have enough room to ride it out the pullbacks, but you can select the significant pullback to the EMA and place it one tick below so you can still be in a game and lock in partial profits. We have a second entry long, which is quite tempting, but notice we're not fully at the EMA. We're not fully at the EMA, so I like to see some strong pullback. Can get some different setup. Not fully at the EMA on the hollow again. Now the signal bar is also bad, so I can't really take it, but still not at the EMA. And at this point, market keeps working higher and market keeps working higher. This is starting to be a very strong uptrend. And right now, what I can do, I can be widening the channel simply because overshoot is not acting as it's the valid pattern. There can be some broader two-tier channel, so I'm going to widen it into this bigger pattern. Okay, prices keep correcting, working lower. I have to redraw the short and downtrend working lower. We have a new high, first entry long, pullback. We have what it's called right here, EMA gap bar, EMA gap bar, because it's the first bar since this uptrend started that broke below the EMA, and it's going to most likely act as a trendline rule. Problem is, we still like to see the break in extreme before we're going to take it. So this is a little bit more advanced, and because the downtrend is in play, I need to be a little bit more patient, but this is something you can observe. Okay, new low first entry short, pullback, second entry short, failure above EMA, and this is interesting. Problem is, this downtrend doesn't have new extreme. Okay, this downtrend doesn't have new extreme. This right here is a failed second entry short. It's not a bad setup, you know. It's actually a decent bar. You can consider. I'm gonna mark it. It's not a bad setup. I wanted to see a bit stronger pullback, but decent bar. New low first entry short, second entry short, failure. This downtrend doesn't have new extreme, but when the trend is strong, problem is also you cannot get tunnel vision. Yes, it looks strong, but there is no equilibrium. This was basically a very strong one move working higher, so there can be stronger pullback. Quite overextended push phase, but if you took it, I can see why it actually worked. Okay, 10 ticks, so you had 2 ticks to spare, 8 tick scalp was reached. Now if you are holding a longer target profit on this one and you see prices going sideways like this, stack like this, you now can exit because remember, your edge has dissipated. This is not what is supposed to happen when you are taking a failure, a trap. You can see you have 7-8 bar stack right next to each other, so you can exit, take break even, because this is a long consolidation area of indecision, basically no trade zone. And because I can see EMA flattening on a bigger scale, I'm gonna project possible trailing range like this, because it could explain we have one leg down. There can be the second leg down somewhere to this area where you could be considering buying again. Okay, downtrend keeps working lower. Break, new extreme for this downtrend, so we are breaking low. So your goal as a trader is to make sure you're gonna let the correction play out. You're still thinking bullish, by the way, okay? You're not thinking about selling. This was a very strong uptrend. The main pattern is still in play. Small downtrend played out. Okay, we're pushing above EMA now. And this is interesting. We have high, low. We have lowest low here. First entry short, second entry short failure. I'm gonna reset the count. Actually, there's a first entry short. There is no tick higher. So yes, you can actually treat it as a failed second entry short. So I'm gonna treat it that way. I thought this is a high, low simply because I have so many matching lows here, and you can reset the count either way. This is either high low above EMA or failed second entry short. It gets you to the same place because you pushed above EMA. This means the push phase has been resumed. Push above EMA is confirming that the buyers are in the market, and because the main pattern is bullish, you now can go long. Great hyperbolic setup, great signal bar. You're not chasing it too far from the EMA, and market keeps working higher. You can see prices are reacting to our resistance. We cannot go long here right into this high. There's no setup anyway. Market keeps correcting. Okay, we keep correcting lower, and now it is getting way too late, and market is about to close. A lot of bulls are taking profit. So this is the overall structure for today. A low amount of bars. We basically started with a little bit of a chop. Quickly we turned into a nice bullish uptrend. You had a couple opportunities on the way up, but this was a long area without a setup. Once you can even pull back to the EMA, you can see how strong an uptrend this is. A bunch of first entries far from the EMA, but you can't really risk it because you never know when it's going to pull back. This time it worked, but next time you're going to take it, it's going to reverse on you. This is why we wait for the two-legged pullback for the high probability setup. You're going to wait for correction to finish, and once you see the push above EMA, this is where you're going to start buying again. Towards the end, a lot of bulls took profits, thus there's the major sell-off. Decent price action with few setups. This is still around the rollover date, so for this reason it was a little bit slower, but once everybody rolls over, eventually the market should pick up again. I hope you had a good trading day. I'm gonna wrap it up, and I'm gonna talk to you next time. Good luck with your trading.